Balance sheet juices in less than 5 minutes. Did you know that some companies in the stock market falsify their results, and it is possible to talk about them if you want in the next episodes, and one of the ways to deceive these companies is to research and audit their financial statements. The balance sheet is the second part of the financial statements of any company, and it has already been mentioned. We explained the first part, which is the income statement. I advise you to watch it if you did not, and if you have watched it, you must remember that the income statement talks about the company's income during the whole year, while the balance sheet reveals to you the company's current situation at this moment in this year. The balance sheet's equation, simply put, it is everything you own minus the receivables that you owe equal to the net what you own. So the balance sheet is divided into two parts, assets and liabilities. If we start with the assets, the first thing we notice is the total current assets, which are simply what you own and can be converted into funds quickly. And of course there is nothing faster than cash, as well as short-term investments and the cash equivalents, etc. Then you have the total accounts receivable, which are things the company sells with debt. Then the inventories, which are clear from their name in the case of Apple, are the iPhones and MacBooks that are in their warehouse and their opposition before they are sold to customers, and other variables under total current assets. And if this is easy to transfer money quickly, there are things that are more difficult to transfer. The easiest example, of course, property, plant and equipment. I mean, such as their offices, factories, machines, and so on. But do not forget that all of these gradually decrease in value over time. It is not reasonable that you buy a machine today, and the latter, after 10 years, continues to operate with the same efficiency. For sure it will lose its value, and this is the deduction of accumulated depreciation. And from it you can get net property and equipment, which are tangible assets. But do not forget that you have intangible assets, like the company's fame, patents, strength of its brand, etc. If you combine them with the list items left in front of you, you will get long-term assets, and if you combine them with existing assets, you will get total assets. In the case of Apple, we note that the total assets are $351,002 million. I mean, if we sell Apple now, this will be its value, but of course this large amount does not go directly to the owners of the company, but the company must pay the first liabilities or dues. The list of liabilities also begins with current liabilities, which are short-term receivables. In other words, during this year, the first thing, of course, is that you have the accounts payable, which are the receivables of the company's suppliers. As Intel, which sells the processor to Apple, of course selling with debt, so you see it under accounts payable. Other than that, it should be noted that short-term debts and capital lease contracts, meaning, as we mentioned, are the liabilities this year or short-term, but of course we have a long-term debt, and it is not due from you this year, but in the future. Of course, the first thing we have is the long-term debt, and the capital lease contracts are simply the debts that the company must pay in the coming years. And if you add current liabilities with long-term liabilities, we get the total liabilities. Of course, in the case of Apple, we notice that the assets are greater than the liabilities, and if we subtract, we get the total shareholders' equity. This means if we sold Apple today and paid all the dues on it, the owners of the company, this means that the investors will receive $63,090 million, distributed among them. Under this heading, you begin by noting the company's stock and dividend. What we notice is that the total ordinary shares constitute about $57,365 million of shareholders' equity, and the rest is retained earnings, which is the net profit for this year after distributing profits to investors. Of course, dear viewer, you, as an investor, want the company to own more assets than liabilities, and at the same time, you want the current assets to be excellent and have good liquidity so that the company can move freely and buy or acquire if needed. And so, dear viewer, you got acquainted with the balance sheet and understood the second part of financial reporting, which is important for all investors, and we have the last part in one of our next episodes, which is cash flow. I hope you benefited, and if you still have questions, write them in the comments and I will try to answer them as soon as possible. If you liked the episode, do not forget to subscribe, like, and share it with your family and friends. Rashad, the presenter of your program Hit the Road to Fire, was with you. See you soon.